presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom. How you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shue filling in for Tom O'Brien yet again. I hope you all are having a great day so far. Let's take a look at what we got going on in the market. Start everything off. We're looking at the composite, about 0.2%. Trading at 17,946. Dow Jones Industrial up about 0.14%. Trading at 42,216. We have the dollar, DXY, up about 101.68, up about 0.46%. So we're seeing crude move up a little bit. We're seeing rates go up a little bit in the 10-year bond, off from a low of the 3.69 we were seeing last week. You have the dollar getting kind of strong right here too. You know, a lot of stuff, you had some numbers come out that showed the labor market was a little bit more resilient. We're waiting for the farm payrolls. You know, if it seems like this market, the labor market in particular, is a little bit more resilient than people were anticipating, you're not going to get a massive, or at least the idea of another 50 basis point rate cut by the end of the year isn't necessarily as pressing as it is if you have some issues in the job market, which a lot of this kind of fear was based off of. You see some nice movement right up to the upside there. That 101.68 market is holding okay, considering. Crude oil up about 0.87%, 70.44. Okay, of course, you have a lot of stuff going on right now. Israel is clashing with Hezbollah forces. I'm not sure if any massive campaign took place yet against Iran. There's obviously some fear around that. However, there is enough oil and stockpiles right now. Production is good enough. You also have the Saudi minister coming out and saying something a little bit interesting. Okay, so he warns $50 oil as OPEC Plus members flout production curbs. So take a look at this a little bit. The Saudi oil minister has said prices could drop to as low as $50 a barrel if so-called cheaters within OPEC Plus don't stick to agreed upon production limits, according to delegates in the cartel. The remarks are interpreted by other producers as a veiled threat from the kingdom that it's willing to launch a price war to keep its market share of other countries, if other countries don't abide by the group's agreements. Benchmark oil prices rose Wednesday with the most actively traded contract, Brent, up about 1.9%, trading up about 0.94% right now, just under 75. We're trading at 74.25. There are fears in the West that a wider war could choke oil exports from the Gulf that passes through the Strait of Hormuz. You know, it seems like nothing ever really happens on this end. Of course, restrained ground campaigns into Lebanon is kind of insane, I would say. Not insane, it's just kind of, it's crazy. Like, a lot's going on, right? There's escalation, stuff like that. If Iran feels that it's necessary for them to kind of flex their muscle more than they have, with the recent attacks, you could see some pretty intense escalation. I know there seems to be at least intense conversation coming from the Israeli side regarding Iran's activities in it. And of course, this is definitely some of the fiercest conflict we've seen in that region for quite a while, at least the most sustained over a long term. Looking at the E-mini kind of sideways right now, trading 5,765. That gold contract off slightly, but not moving too much, trading at 2,676. Copper up about 1.5%, $4.65 on that contract. And then silver as well, doing okay today at 32.04. And then that Russell is completely sideways right now. We'll talk a little bit about Celsius today, but I do want to look at Tesla. So let's pull this up. Of course, we were talking about that they had earnings reported yesterday. After the bell, they kind of missed some estimates off about 3.4% today. So they announced third quarter deliveries on Wednesday that slightly missed expectations, sending the stock down about 5%. Early trading, we're off about 3.4% right now. The The EV maker delivered 462,890 vehicles in the 3 months ending in September 30th. That's up 6.4% quarter over quarter to mark the first quarter delivery growth this year. Numbers also came in ahead of 435,000 EVs the company delivered in the year ago prior. However, Wall Street did want, they were off basically about 7 on it. So you're kind of selling off a little bit. They have the robo-taxi coming out. That's going to be on October 8th, or at least, October 10th. That's going to be an event they're having. And then, of course, this is somewhat positive. The news coming from China as well, because at least they have a foothold. And they're really situated pretty well as far as American EV companies are concerned, because they do have such a good foothold in China. You're seeing companies like NIO and Li Auto blow up on this kind of news as well. On the broader scale, at least for American consumers, and I'm looking a little bit at Rivian at this perspective here. Tesla gets affected as well, but they at least have exposure in China. So that's up 1.97% today, but of course we're moving back down. We really were testing that level right there of $10. We'll see if we can come back off of it. If we break through it, then we're going to the lows on that. This is from Edmunds. Okay, and this is a little bit interesting. So they have unrelenting auto financing conditions, this quote unrelenting, squeeze new vehicle buyers in Q3 2024. That's again, according to Edmunds. So what's happening with this? Interest rates are sitting at near record highs. The average new vehicle APR in Q3 24 remained elevated at 7.1%, which is the same as Q2 in 24. This marks the 6th consecutive quarter that new vehicle APRs hovered above 7%. 0% finance deals remain nearly impossible to find or qualify for. Consumers continue to sign up for longer loan terms in order to stomach higher prices. So 69% of new vehicle loans had terms over 60 months. In Q3 24, similar to a share of 70% in Q2 and Q1 as well. 84-month auto loans are on the rise, accounting for 18.1%. New vehicle shoppers are taking on 1,000+ monthly payments at near record levels, which is absurd. And the majority of car shoppers are holding off on purchasing the vehicle because of high interest rates. That is obviously, I think to some extent, probably won't affect Rivian in a major way, as the people who are probably getting squeezed are lower income, and Rivian consumers tend to be higher income, but it's still going to have some kind of impact as well. Of course, everything on the Chinese side is completely different, with Li and NIO doing quite well, especially because some of the barriers to entry to get EVs are getting lowered there. The Chinese government's hoping to stimulate their economy a little bit. Stellantis also getting completely rocked here. We'll pull this up right now. Off about 0.55%. Of course, a few days ago, you had this massive gap down from that 16 level area to about 1361. It hasn't really recovered much then. It's reported another quarter of plunging sales. The company behind brands such as Jeep, Jeep has its own issues for sure. But it has a so-called disaster on their hands. The automaker sold 305,000 vehicles, which is a 20% decline compared with a year earlier. That follows the second quarter marked by a similar 21% year-over-year decline. And Ram, Alfa Romeo, Jeep, Fiat, all these have some kind of bad qualities associated with them. Folks, stay right there. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. We're talking a little bit about the auto industry before it went, some of the pressures that exist over here in America, some of the pressures that are easing over in China. I was saying Tesla's probably in a better position right now. They have obviously a huge exposure in America, but they are diversified with their exposure in China. Here's a little bit of an idea of how this stuff is going over in China. Li Auto, okay, they reported its delivery figures late Monday, 53,708 vehicles. That's up from 36,060 in 2023. For the quarter, Li delivered almost 153,000 vehicles. That's up 45% year over year. Okay, NIO delivered 21,000. That's up over 12% year over year. Xpeng is up about 16% year over year. Baidu, insane. It delivered 418,000 all-electric vehicles and plug-in hybrids, up 46% year over year. We're not going to see that in America. Tesla's going to get some exposure from this, which is huge. So if you're still trying to get in on it, at least EV, I would hold off probably, and this is just me speaking, but on something like Rivian, just kind of chill out on it. Stellantis, chill out. Ford is doing okay for their hybrids. They're selling a ton of hybrids. And I think it will still become, this will catch on in America, no doubt. But, you know, you want some massive exposure that way. I mean, look at NIO. Now, the problem is you got to keep in mind that you're investing in a Chinese company, which is fine, but you run some kind of risk with how their government interacts because of that kind of stuff. So anyways, let's look at one company that's actually doing okay kind of in this realm, which is, I never thought I would say this again, but it's actually Nikola. Obviously, they had some horrible issues a few years ago. They weren't being completely honest with what was going on. They sold off immensely. You can even say here from earlier this year, from $34.65 all the way down to the $5 area, up 16% right now. Their wholesale deliveries of hydrogen-powered electric trucks jumped 22% in the third quarter from the previous 3-month period. And the company said on Wednesday, signaling the steady demand for big rigs. Super interesting. The EV maker delivered 88 Class 8 hydrogen fuel cell trucks to dealers in the quarter, in line with expectations of 80 to 100 units, but it lagged the 80% sequential surge in deliveries reported in the second quarter. Nikola sold a total of 235 units. The company is benefiting from new customers placing orders for its hydrogen-powered trucks. This is already something that is massively popular in China as well. But they're doing okay. I'm still highly suspect of this company and a little bit of the technology as far as its adoption in the US. It just doesn't have that kind of like media swag, I guess, like EV companies have, right? So let's talk a little bit about Palantir, a baby right here, treating me very well today. Give me 1 second to pull her up about 2.98%. So this is, all right. So what I was saying with Palantir, and if we start seeing some more movement, I said this maybe a month ago or something, we start seeing more movement into enterprise solutions, not just military, although that is sweet to get those contracts and get so ingrained into the operations of the military. But if they can get into enterprise, then we're going to really start seeing some cooking with this stock, okay? So the news that comes out today is that Palantir Technologies partners with EdgeScale AI. This is going to operationalize AI in manufacturing and utilities. This is the other thing I'm saying. All this hyper investment into AI, when does it pay off? It's not immediately clear, but when you start seeing stuff like this, you start getting a better picture of how this is going to work. Okay, so the collaboration aims to operationalize artificial intelligence in manufacturing, utilities, and complex industrial environments. And OI is massive, right? How funny is that? The lead of the commercial partnerships is Tom O'Brien. Not our Tom O'Brien, but another one. Extending the software services on VCEs powered by EdgeScale, LiveEdge enables direct access to hard-to-reach operational data and automates physical processes. The multi-year partnership positions both of these guys integrate into critical industries for customers. Again, this is massive. They also have the Maven Smart system for the military. That's $99.8 million they got from that. And this is going to continue to expand out. So I still think it's great. You do have some like short up volume at these levels, which kind of makes sense for that sideways movement, but you're not getting any like large cracks down, nowhere near that kind of gap up here. And so it's pretty nice, right? And you get somewhat of a high volume high on this area, at least the day before the high. So I like this stock. I think it's really interesting. Keep looking at it. And it's becoming a little bit more apparent what they're actually doing and how this is going to pay off for them. As well, I mean, they only had their IPO a few years ago. So, I mean, it's nice to see this company actually taking some movement up. Let's talk a little bit about a stock that got sank. And we were speaking about how that was potentially going to be the case yesterday. Things got a little weirder as well with them. So this is Nike going right back down to reality and probably a little bit more to go as well, off about 6.4%. So let's talk about it a little bit. They reported fiscal first quarter revenue that missed estimates and withdrew its outlook for the year amid a CEO transition. Very rough, especially for such a large company. Reported first quarter earnings per share of 70 cents. That is higher than Wall Street estimates of 52 cents. And they posted a 26% decline from the year early period. Nike's revenue of $11.5 billion fell short of the analyst expectations of $11.65. That marked a 10% decline from the year earlier. Nike sales slumped in both its direct-to-consumer business, which is tough, because I already knew the wholesale division was, that is really going to be Hill's new struggle, right? His hill to get over is getting back in with those wholesale guys. The direct-to-consumer was really something that people were hyped about. It gave this kind of air of, I don't know how to say it necessarily, but it was exclusionary almost, right? Now in reality it wasn't, but it had that idea like I gotta go straight to this source here and get this thing and I gotta buy people out. The aftermarket for Nike is huge, and I think that's doing very well, but Nike's having a hard time really. I think they're attempting to emulate it that way, but it didn't really work. So even the direct-to-consumer was down. The revenues were $4.7 billion. That's a 13% decline from a quarter a year ago. Wholesale revenues were off about, were $6.4 billion, and that's down 8%. Now, what gets worse on this is that the CEO didn't even show up for the earnings call. The CFO did. That's Matthew Friend. He led the call instead. Despite the better than expected bottom line, Nike shares shed obviously were off about 6.45%. Nike said it expects revenue to drop 8 to 10% in the current quarter, worse than the 6.7% decline that Wall Street was expecting. The company withdrew full fiscal year guidance. You know, a move implying that its annual revenue decline might be worse than 5% than people were anticipating. During the call, Friend made it clear that Nike's deliberate pullback from key franchises, which is the Air Force One, the Air Jordan, the Dunk, will continue to weigh on its top line for the rest of its fiscal year. Its greater China market, This is what we were talking about on here. It fell 3% on a constant currency basis. It's a little bit better than the 7% decline that Wall Street expected. I still think you have some major issues with Nike in China regardless, especially going forward on it. And yeah, this is going to take a lot of time for them to recover. Don't catch the falling knife on this. You know what I mean? People are like, buy the dip. Yeah, I mean, you got to do a little bit more research than that, right? A little bit more thinking in it. I think this stock has a long time to go before we can get back competitive levels where you're trading in those triple digits. You know, folks, stay tuned. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. I want to take a look over at Celsius right now, trading off about 1.3%. I just had someone asking me about it and kind of what I thought. this is an extremely prevalent product. I mean, you see it everywhere. Every Publix, and tell me if this is the same for you in your state, but at least in Publix, you go into the energy drink section. I mean, these are full-blown aisles, and there's just so much Celsius that I don't know what to do about it. I don't necessarily drink Celsius or anything like that, but I recognize that, my generation doesn't really drink coffee that much anymore. Obviously, some people do, but energy drinks are the new thing. And there are definitely, some concepts, I would say, attached to certain energy drinks. Like if you're professional, you don't want to be sitting drinking Monster. Bang kind of fell out of love. Red Bull is one that can kind of compete, but Celsius has this weird kind of market capture where they're targeting people who are very health conscious and still, wouldn't drink other energy drinks. But Celsius does a good job of getting them, and they are everywhere. Now, is that going to stay forever? Obviously, on this news that they had on September 5th, you see this massive volume to the downside. What happened, apparently, is that Pepsi had that revenue that was up over 102% because Pepsi ordered too much product, and they've been trying to get rid of it. This obviously has an impact on them for the long term, right? When does Pepsi buy new stuff for the current third quarter of 24? Celsius management estimates that Pepsi will order between 100 million and 120 million less. This is dollars, less than it ordered in the third quarter of 2023. During its chat, though, Celsius management pointed out that Q3 sales for its products are up 10% so far. This is kind of hard to say where it goes from here, right? I think there's probably not, I would say for me, there's not enough information to be like, hey, this is like a super bottom, guys. You know what I mean? Obviously that 10% is decent, but their big buyer is going to be Pepsi, right? If Pepsi screws up or for whatever reason isn't enough of what they want or whatever, you can kind of run into some issues with Celsius. That's kind of my opinion on it. But, you've got some decent volume, but it's all consolidating at basically lows. That's not necessarily bad that it's not breaking lower, but I don't see anything that says, hey, we're definitely, we've hit a bottom here. Let's go a little bit higher as well. I just don't see, at least right now, it doesn't look attractive to me. Let's take a look at Micron a little bit, and we'll talk just some stuff regarding IPOs with new chip companies. It's kind of a little bit interesting. So Micron coming down off about 0.39% today. They had basically a rate hike. They had a price hike to $150. The discussion mainly focused on overall health of the DRAM and HBM market and Micron's increasingly differentiated portfolio. Overall, the company expects server growth in the mid-single-digit percentages, driven by both AI and traditional non-AI servers. Noted that the assumptions for both PCs and smartphones appear conservative, with a recovery only expected in May quarter. The HBM has been investors' primary focus, but beyond the HBM, this includes products such as high-capacity DRAM DIMMs. The HBM, the high bandwidth memory, is certainly what they need to get into. Now, I want to move on. I just kind of wanted to put that out there because I want to talk about this company that has a IPO coming out, which is Cerebras, okay? So let's talk about that. So in this realm, how this whole gig works right now with the language, with, deep learning for large language models, is they're using GPUs. I've said on here multiple times that GPUs aren't really the most effective way to do this. It's just what we kind of had, and we built out from that. And NVIDIA is obviously building stuff, still GPUs, right? But for deep learning, away from just like graphics processing, which was going on. Back then, when you're trying to do this kind of stuff, you really only had two options, which is going to be the CPU, and that has its own issues with the architecture that it has. And then GPUs are the only other alternative. GPUs doing this parallel processing, you've heard me speak about this a bunch, that was kind of a little bit better, or it was better than what the CPU could offer for deep learning. In that time, you've had things like tensor processing units come out, which is kind of what Google focuses on this a little bit. But now you have Cerebras. And what Cerebras does, I don't have a chart for you because it's just announced its IPO, but they are doing these massive sized wafers. It's insane. Let me see if I can get like the exact info for you on how it works. Of course, I can riff on it but having the exact is a little bit better. I want to see what they call it in particular. Yeah, so WSE. And so the idea behind these, right, the wafer scale engine is going to make massive, basically chips, right? The issue that you have with GPUs and even the TPUs to some certain extent is it all needs to communicate with each other. The GPUs tend to be a little bit more modular, right? This is what NVIDIA is making, and that's fine, but it's basically inefficient to have so many nodes communicate with each other when you scale it up this way. And Cerebras is attempting to kind of attack that issue by making these chips that are 56 times the size of these GPUs, which is actually unreal. It's going to be a lot better for efficiency, and this is really the name of the game right now. Can you get accurate? You don't need to be as accurate as GPUs offer, right? That's where TPUs come in. And then can you do that at an efficient kind of energy consumption, which is pretty nice. So Cerebras unveiled its investor prospectus on Monday, taking an important step towards listing its shares on the stock market. In doing so, the startup aims to break the drought of hot IPOs. Even the conditions of public are good, interest rates are falling. Okay, we know all this, right? Cerebras would be among the first AI companies to go public since OpenAI released its ChatGPT chatbot in 2022. Tempest AI also did this as well. Let's see here, the company revealed that it brought in $136 million in revenue in the first 6 months of 2024. That is an increase of more than 15-fold from $8.6 million a year earlier. It reported a net loss of $67 million in the first 6 months, a slight decrease from the loss of $78 million. Yeah. So basically, this is really what they're trying to lean into, is you don't need to buy so many of these GPUs. You can just get these large wafers and you're going to be good to go. Now, the problem is there's already been so much purchasing of GPUs. No doubt NVIDIA is going to maintain a pretty dominant position, but it can't be understated, it can't be overstated that GPUs were not designed to do this, and there are other technologies that do it a little bit better. So it'll be interesting to see what happens. Cerebras began shipping its chips in 2019. The company raised $740 million in VCF, valuing it at $4.1 billion. Building the supercomputers for G42 in 2023. That was in Abu Dhabi as well. It's an interesting company. Take a look at this kind of stuff, because when you start getting these new developments in AI, and we're seeing with things like Palantir, and then even using the likeness of late celebrities that is generating a ton of revenue for companies, this is where AI starts getting profitable. Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Composite trading up about 0.2%. Dow Jones Industrial up about 0.1%. Let's see what the SPY is doing, up about 0.08%. Talk a little bit about some IPOs with Cerebras, some other IPOs that I'm kind of interested about. This one in particular is KinderCare Learning. Now, I have my opinions on corporate child care, but I will say, financially speaking, this company seems to be doing all right. Looking at their 10K here, basically the long story short on this, large provider of early childhood education, care service in the U.S. By center capacity, which is important to note. Company serves children ranging from 6 weeks to 12 years of age across its market-leading footprint of 1,500 early childhood education centers, capacity of more than 200,000 children, and contracts for more than 900 before and after school sites. Can be very lucrative, at least. Located in 40 states and D.C. as of June 29th. They booked about $2.6 billion in sales for the 12 months ended June 30th. It looks like they're trying to get priced October 7th of this month. Plans to raise $600 million by offering 24 million shares, so it's about $23 to $27 a share. So I was taking a look at them, and yeah, they're everywhere. The kind of how people respond to them or their ratings, the reviews seem to be relatively location dependent, which I think you would kind of expect. But I would say also one of the positives about having something like corporate childcare is that you can kind of anticipate a similar level of quality across the board, which is why I think people would go for something like that over, something local. But still, as it says, 2.6 billion in sales for 12 months ending in June 30th is pretty solid. We can take a look over at their 10K here that they submitted and kind of look at what they're thinking of doing, which I think is interesting in this. Let's see if we can look at. So the business strategy. Okay, so this is what they're doing right now. They have the charter schools, which is very nice, obviously huge. Charter school management company based in Westboro, Massachusetts. That's minority equity investment. Educational content and delivery for public schools. That's also a huge way of making money. Minority equity investment in Voyager Expanded Learning, selling these curricula is super lucrative. Educational content delivery within our centers, same kind of concept, so administering that whole thing. And they're continue to open and acquire centers, positive growth plan, capitalize on strong brand identity and reputation, which is really what they have going for them. I think the brand recognition is really positive as well for them. Pursue strategic growth through acquisitions and investments. And really, I think people who have kids tend to be in higher income classes, tend to do these kind of more one-off schools, right? I see that a lot in Florida, and some other places as well. But for the average person, if it's a two-people household in that capacity, like two adults, both are going to be working usually, right? And if you're not making a ton of money to send them to these, Montessori schools or whatever they are, which I think are great, but it's just sometimes out of reach for a lot of people, something like this might be positive. You understand that there is kind of a shared process that the teachers are going to go through. You understand what you're getting with it, right? Because it's just so corporatized. This is really, I think, an interesting opportunity. And I get weird trying to buy IPOs and stuff, but it's something I'm going to keep my eye on for quite a while. Because they're going to do more acquisitions and investments, which I'm assuming is probably what they're going to be using a lot of this money for, in addition to expanding out, increase existing center revenue by sharing that. So yeah, okay, this is this kind of, federalization almost of the whole thing. So sharing best practices, providing incentives for center directors, using targeted marketing, recruiting, retaining, and training qualified staff. Of course, all things you would kind of expect. If you want to read more of this, just let me know, and I can email this to you. Of course, it's just on sec.gov. You can Google it as well. But something interesting to look at. And then Standard Aero. This is going to be SARO. Let's see here. Is this on yet? Yeah, not really. So anyways, we'll talk a little bit about that. Shares surge after IPO raises $1.44 billion. Company investors sold 60 million shares for $24 each. Let's look at this. Shares climbed 31% in aircraft maintenance service providers trading debut after the firm and some of its investors raised $1.44 billion in the IPO. Company's shares traded up to $31.50 each as of 12:53 p.m. on Wednesday in New York at an offering price of $24 a piece. Funds affiliated with BlackRock, Janus Henderson, and Norway's Sovereign Wealth Fund, which I love reading about. And people, a lot of this are like talking about with like new IPOs, which is fine, but I'm just kind of like, I was trying to get my head wrapped around what they do that's so different, and I couldn't really see anything, right? Beyond the point that it's, relatively large and you can get some standard practices and why places. Obviously, with everything going on with Boeing, this kind of thing could stand to make a lot of money. They do aftermarket, basically engine services, and that's for fixed and rotary, as it says. Standard Aero had a net income of $8.6 million on revenue of $2.6 billion. I mean, okay, and that compared with a loss of about $12.6 on $2.3 billion revenue during the same period. Okay, so that run to profitability is actually pretty huge over that year. But again, I think these new IPOs, I mean, obviously I think KinderCare and Cerebrus is a little bit easier to wrap the head around than whatever these guys are trying to do, which I think is fine. And I think there's a big need for this, again, especially with what Boeing's going on with them. But I don't really see the attraction on that level besides the backers with it and stuff like that. We took a look at Carnival as well. I feel like this got unfairly treated, especially considering they actually didn't do really as bad as anyone said. So up about 2.25%. Obviously, some pretty big volume to the downside. Closed much higher than that, but regardless, I think people were ready to hate on it. The outlook portion is bringing down the CCL stock, but it's not even necessarily a bad outlook. Of course, if you price in a higher one, I can understand, but still, I wonder if this was like a pretty, maybe an overblown reaction to the capacity raise. So Carnival anticipates net yields growing by approximately 5% in the constant currency in the fourth quarter and by 10.4% for the full year. That's still great. Analysts surveyed were looking for 5.76 to 10.52 respectively. So the net yields is up approximately 10.4% compared to 2023. Adjusted cruise costs, excluding fuel, up approximately 3.5% compared with 2023. That's 1 percentage point better than the June guidance. Adjusted EBITDA of approximately $6 billion. That's up over 40% compared to 2023 and better than June guidance of nearly $200 million. The adjusted ROIC is approximately 10.5. Fourth quarter of 2024, company expects net yields up 5%. Adjusted cruise cost, excluding fuel, up approximately 8%, which can kind of run into some issues. I think obviously it has nothing to do with fuel, but fuel probably isn't going to be a massive issue for them. And then adjusted EBITDA of $1.14 billion. I also think too, I said this maybe like a year ago, it was like young people aren't doing cruises, and it was true at that point, but this is, I think, starting to change a little bit. It is a way more affordable way for people just to get out and do something. I have friends right now, and we're not loaded or anything like that, and so it's always difficult to buy, like, say, a $600 plane ticket somewhere. And why not do something like this? And there's some people that I know who are seriously considering it. So I wonder if this is just getting kind of inappropriately kind of bashed down. And this is low volume for the day right now too. And so I wonder if we can get, test around this level and get right back up. Folks, stay right there. We'll be right back for a short segment.
stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome, folks. This is a short segment. Jacob Shoup obviously filling in for Tom O'Brien. This day is winding down for sure. I'm looking at Meta right now, off about, 0.53%. Man, I am just, every time I see news on this, or like dig a little deeper into what they're doing, I'm just upset that I didn't get in as much as I was in at certain price points. So they unveiled a 299 Quest VR set, okay, and the Orion AR glasses prototypes. I tried these glasses. It's unreal. I want to say too with the VR, I'm really surprised, again, that augmented reality did not catch on before VR, but it's just not how it's leading. Dude, these kids on here, I get like a cousin, young, some other kids that I know through friends and stuff like that, like their children. All these kids are on VR. They are all playing it. $300, this is great, and they're gonna sell a bunch of them in Christmas. I believe that. This is all from a price of $500, so $300 is compared to $500. It seems like they're doing everything right. These like glasses they have are just unreal. You can hear through them, so you can like pick up like that. It gives you readings on the actual glasses themselves, and it's not really a strain on the eyes. This stuff is like absolutely insane. They have Neural Interface company that developed the EMG wristband, excuse me. They have so many H100 GPUs for pre-trained Llama, which is huge. Kind of sad about when they were training, they got shut down because it was just spewing a bunch of nonsense. But I think that gets rectified. I think they're not dumping as much. I mean, they are dumping a ton of money. Don't get me wrong, right? But I run into an issue with Microsoft going forward because of how much they're sinking in. Now that has the potential to really pay off regarding like AI and infrastructure and stuff like that. But that's years down the line. And Meta, of course, dumped a bunch of money into the metaverse. But they still get to sit on that for a while too, and it seems like they probably won't be as cash up as maybe Microsoft would be on the long term. But keep your eyes out for this VR thing and how they do in really the quarter after, because I think Meta is going to see some pretty good sales with these things. Folks, thank you so much for joining me today. I don't know if I'll be with you tomorrow, maybe not. We can take our bets. I hope you all had a great rest of your day. We're going to be joined tomorrow at 9 a.m. by Tommy O'Brien for the Morning Market Kickoff. It is a fantastic show. Take care. We'll see you tomorrow.
Building